Okay, well, you want to go ahead and introduce yourself, Jordan?
Absolutely. So I am Jordan Gillum. I live in Seymour, Tennessee, which is basically Knoxville or Sevierville, whichever one you're more familiar with. I have been a Symmetry Financial Group agent with my husband for 3.5 years now, and it has been one of the most incredible journeys because Symmetry, as a Symmetry agent, what we do is we specialize in being brokers. So we have 30 different insurance carriers, and we can insure just basically every aspect of your life. So we can do, death benefit insurance, critical illness, disability, dental, vision, whatever. But this product that Betsy and I will be sharing today has been the most exciting product that Symmetry has ever brought to anybody's lives, because you don't, like life insurance, with life insurance, you have to die for it to be used, which nobody likes to talk about. It's not tangible, and it's not really the most wonderful subject. But debt-free life is something that we can help families use to get out of debt and enjoy their life. So I'm really excited about that. I'll pass it to you.
Yeah, hey, so my name is Betsy Barr, and I'm also in Knoxville, Tennessee. And so anyways, I've been with Symmetry for about a year, and just love being with a company. And then when Debt Free Life came along, it was just like, wow, this is my niche. This is where I love to help families with debt free life. I've got a husband and two little boys, 8 and 6. And actually, my husband was training today to join us here at Debt Free Knox. So he's just all excited. So he may be joining us here on a seminar soon. Who knows? But he's also a church planner here in Knoxville, and my background is as a math teacher, and so I get a little nerdy with all the numbers. So Jordan allows my nerdiness to come out, so I appreciate that.
Absolutely.
Anyway, so we'll just kind of go ahead and get started here. So with Debt-Free Life, we kind of like to start by asking, are you 100% confident in your current retirement plan? And what if you could eliminate debt in 9 years or less without spending any additional money? Now, you might be thinking that sounds too good to be true, but it, in fact, is not. It is what we are able to do time and time again. And even just this past week, I was working on one where they didn't spend any additional money, and I really just did a happy dance because we were so excited to be able to help her. Hey, Dana, welcome.
Welcome, Dana.
Hi, guys. Hi.
Okay, all right, and so what we're going to be doing here is we will teach you how to reduce the interest that you're paying to lenders, erase your debt in 9 years or less, decrease your taxes, improve your cash flow, and start saving money. And then we're going to help you retire with tax-favored income. Now, what's so exciting about this is not something that is new. All right, we're not kind of creating some new random thing that, we're just hoping it might possibly work. This is something that people who are very financially savvy, very financially successful, they use this idea of a debt-free life, and they've used that to help build their empires. So here's some examples. Disney, Doris Christopher, Ray Kroc with McDonald's, and then J.C. Penney. So this is something that has been really helpful for those people, and now we want it to be able to help you and your family. And anyway, so Jordan, hit us with some knowledge.
Yes. So knowledge is power, guys. The more that you know, the better that you can prepare. So knowledge only becomes power, though, when you apply it. So that's what we're going to lean into today. We're going to talk about, some things that we can help clear up as far as address and make sure that we're all on the same page, so you can see why our families are deciding that debt-free life is for them. So let's move on to the next one. Awesome. So we make through this journey through life. We have this super cute game over here, but what it's actually supposed to symbolize is the debt that we take on. So, like you go to college and you immediately owe money to someone that you don't really know how much you owe. You don't even know anything about interest rates normally. I don't care what statistics class you're taking in college. You don't really know what's ahead of you because it's deferred, guys. Remember, as soon as you're in college, you don't got to worry about that. You step out of college, you meet the love of your life, you get married. We actually just paid off one of our credit cards that we had loaded up from my wedding 2 years ago. So you take on debt when you get married. Now you two love each other and you want to build a family. Betsy can tell you better than I can, feeding extra mouths isn't cheap, and normally it does require you to take on debt. You have to buy a bigger car. You got to put them into college to make sure they're going to the best school, even private school for that matter. And then you buy a house, and then that's an even bigger loan, which we're going to talk about a little bit today. But basically, you're hopefully going to get to this place that we all dream about called retirement, and we really hope that you're debt-free by the time you get there. So there's a lot of money passing through your hands, not a whole lot staying in them. So we do understand that. So that's one of the first things is we like to address is that journey through life. So as we move forward here, we want to see what kind of debt epidemic has the United States found themselves into. As you can see, it's broken down here, but it's nationally, we're sitting around $13.6 trillion in total debt. So with all of that debt, which a lot of people say you have to go into debt to make money, or you have to spend money to make money, or, starting a business costs money and it's going to take a while to come back on the green, or, you have to buy a house, and that means you have to be in debt for 30 years or agree to a 30-year loan as long as the payment's comfortable. All of this debt, a lot of people don't really see the other side of debt. They just think it's a part of life. But what if you could be? What if you imagine, what would it feel like right now if you were 100% out of debt?
Relief.
100%. Yeah, I'm glad you're here because we normally just ask questions and nobody answers.
I love it.
I'm so glad you're here. No, 100%.
Relief.
Think about just being at zero again. So we're going to move forward with the next slide. Oh gosh, this is true, right? So the average household debt here that we're seeing in the United States is about $250,000 per household. So let's look at how money is being broken down. This is how the money coming into your household, how it's going out. On average, you're looking at 34% of every single dollar is going towards interest payments, towards lenders, towards credit cards, anything. You're looking at 40% of your dollars going towards taxes, sales taxes. We were just talking about that with my last debt-free life family that I was talking to. She was mentioning to me the tax that you have in Denver just for putting a registration on your vehicle. And I was like, I'm glad I don't live in Denver, Colorado. But so there's all kinds of taxes that you pay, but 40% out of every dollar is going towards taxes. 23% of it is going towards your lifestyle, and 3% of it is going to savings. We talk about it all the time. With debt-free life, the reason why we take the pride in the fact that it doesn't cost additional money is because, families think that they have to work harder, play harder, put all of this money in a savings account to get out of debt. But we all agree, if you could put more into savings, wouldn't you have already done that already?
I would have.
I know I would have. So what we're going to be looking at, though, is what debt-free life is doing for families, right? So when we show people what debt-free life is doing for a debt-free life family, it's taking less money, like Betsy was just talking about, less money towards interest payments, decreasing taxes, which you guys are probably like, oh, this has got to be some kind of Uncle Sam's going to be upset about you. Well, no, because we're still paying taxes, guys. We're not saying don't pay your taxes. That's why there's 10% less. It's just we're being smarter about it. 30% of the dollars are going towards taxes. 22% is going towards interest. So you have 33% going towards your lifestyle, the things that you enjoy, your family. And 15% of our family's dollars are going into savings, preparing for the future. Yeah, so we get real fired up about that. So we'll move forward here. Oh, yeah, also, remember we were talking about the journey through life and all the times that we are going to acquire debt? Did you know that the average American family by age 65 has touched $2 million? But the average American family at 65 has only $60,000 towards their retirement. Now, if we were to ask you guys, and we've got this shared on Facebook, so I know it sounds like I'm only speaking you guys at you, Dana, and I'm sorry about that, but is that how you envision your retirement? Do you see your retirement on 60 grand? The way I envision my retirement is that I'm on an island somewhere, at least most of the time. And I know this sounds like a dream, but that's what retirement's supposed to be. Retirement's supposed to be your dream. I've got my family. I'm not worried about money. I am totally debt-free. and I'm able to do things for the community. That's how I imagine. I know I say I'm on an island most of the time, but that's really how I envision my retirement. Betsy, how do you envision your retirement?
Oh man, I want to be, involved in my community, giving back, and just around grandchildren and spoiling them as much as possible.
Oh,
And
I
just,
bet you would be a great grandma.
oh, I hope so. My son the other day asked me, he said, "Mom, are you going to be a good grandmother? Because Mama D and Mimi are good grandmothers." I was like, "Oh, I've got a standard to live up to."
I love that. I love that.
So he's already concerned about that.
So yeah, most people do not envision 60 grand fulfilling a retirement.
No.
So we're gonna move.
Maybe
Yeah.
like a short year.
Right.
Yes,
That is what we always say. Maybe one good year of retirement.
One guy that I talked to, he said he wanted $80,000 a year during his retirement. So this wouldn't even cover that for him. So
Right.
okay, let's
Yeah,
adjust the plan.
September. Yeah. Well,
All right, so let's talk for a minute about how banks leverage cash flow. So talking about cash, let's just kind of make sure we understand how it's flowing in our economy today. So, we just recently, I guess now a couple months ago, we all got our stimulus checks. All right, and so then let's say you want to deposit it into an account where you're going to get some money back on that. Okay, and so you put it into a savings account where you're going to get 1% back, and that's pretty good to be able to get 1% on a savings account. So let's just, for the sake of argument, let's call it $1,000. And so you put 1% in, and so anyway, so you're going to earn that interest on that $1,000. Now, what is the bank doing? How is the bank making money off of the money that we put into it? All right. So what they do is they take that $1,000 and they're going to loan it out 7 times, okay, to 7 different people. All right. So let's say someone comes, they want a loan for a car, and so they're going to loan that $1,000 out at an interest rate of like 8%. Then somebody else needs a mortgage, and so they're going to use that $1,000 and loan it out to them maybe at 3%. All right, someone else uses their credit card, they're loaning that $1,000 at maybe 20%. And so what's happening is that you put that $1,000 in, the bank's giving you 1% of that $1,000, and it's loaning it out to these other people, all right? And then they're paying 8%, 15, 5%, 20% back to the bank, who's just, we are really happy they're giving us 1%.
Right.
So of course, the bank is coming out on top here because they're getting more money coming in. And so that's kind of then getting into compound interest. All right, so let's talk about compound interest for a moment. All right, I love this quote from Albert Einstein. So I said I was a math teacher. I taught algebra for a long time. Always had a huge unit on interest, and so these were some things I enjoyed kind of just chatting with the students about. And so this one says, compound interest is the 8th wonder of the world. He who understands it earns it, and he who does it pays it. All right, so that was always just kind of a little bit thought-provoking here. So let me ask you a question. If you were going to start a new job today, and the owner said, hey, we're going to give you a choice. You can either have $1 million up front for the month, or we'll start you at a penny, and then we'll double it every day for 30 days. What's your choice? Dana, what would you choose? Just going to put you on the spot there.
Oh, yeah.
I think we're going to have to take the penny doubled every day for 30 days.
Okay.
Let's
All
see
right,
if we made the right choice.
A bold choice, Dana. I love it. Yeah, when I would do this with my students, most of them would choose $1 million, and I'd get, 1 or 2 brave students that would be like, I'm going to take the penny. All right, let's see. So if we look here, by day 10, the people that chose $1 million, they were still pretty, they were feeling pretty good about their choice, feeling pretty excited, feeling pretty confident. And but then, because we're talking about the power of compound interest, so we keep doubling from the previous day. We're not just adding a penny every day, we're doubling whatever we have. So day 10 to day 11, now we're jumped to $10. All right, then we're doubling $20, then we're doubling $40. Then all the way by day 20, you've got $10,000 just in that one day. Well, now we're going to keep doubling whatever we have from that day. And so then we go to $20,000. Then we're at 41,000, 83,000, all the way down. Now day 27, we got over $1 million in just that one day. And then up to day 30, you're at over $10 million. So way to go, Dana. You get some compound interest.
I need a piece of candy here, like some dark.
Yeah,
we'll figure it out. Candy at you.
Thank you,
we'll
guys.
figure it out, Dana. We'll get you something.
But yeah, so this is just kind of to emphasize that compound interest is super powerful. And so just like Albert Einstein, that quote from him, if you're understanding kind of how this is working and how this can work for your family, this is going to be a really powerful way to keep your family's money in your family's bank account.
Mm-hmm. So let's talk about debt, right? That's what you guys came here for. You came here to see, okay, all right, I've heard about your compound interest. I've heard about all the debt that the world is in. You know what I mean? Like, so when are we getting to the debt part? We're here. We're here at the debt part. But it is very important, though, that we cover the things that we did, because how good would it feel for you to be the bank, your bank? How good would it feel that when you loan money from the bank, you were loaning money from yourself, right? Mm-hmm. We're going to start talking about compound interest here in just a second, but let's talk about minimizing debt to create additional wealth, right? So this is our typical American family. Still, for some reason, Betsy and I haven't put a picture of ourselves in this with her kids like on top of her. We've got some pictures, we just haven't uploaded it yet, but this is a very beautiful family. We're going to look at this typical American family and see what Debt-Free Life has done for them after we see their current plan. So this is Mark and Joyce. They're in their late 30s. They want to retire by their mid-60s, pretty typical. Right now, with their working years, they're bringing in about $7,000 a month, and they want to retire on $5,000 a month, which is $60,000. You know, if they were on the path that most people are on, they would only make it a year into their own retirement before they'd have to pick up an additional job or live off of way less. So we asked them, hey, so what's your plan to get to $5,000 a month? And they said they didn't have one yet, which is okay. That's totally fine. You know, everyone starts somewhere. With their current IRA that they have under $100,000 in it. They have 3 kids. They do not have their college savings started, which is okay. Once again, we all got to start somewhere, and as long as they're not in college, you still have some time to save up for it. And you want to, their current concerns, if I could speak, is to eliminate their debt, control their spending, save for their retirement, establish some type of will and trust so their family can have that without probate costs, providing their children and grandchildren's their education, as well as maximizing their savings. We've got 30 years to do this, right? So we're also going to take a good look at their current retirement plans, which right now you've got a $6,000 emergency savings account that they have, which they're putting $25 a month into. It's pretty relatable for most of us. Once again, remember 3% putting it towards savings, but they're also putting an additional $300 a month into their current 401k, which is about $150 biweekly, which is a pretty standard amount that people put into 401ks. Their account value is currently at $36,500. So let's look at their debt. They're currently in debt, pretty standard amount if you take a look at it. It's 2 credit cards, some dental debt. They've got a furniture loan. They have an auto loan and a mortgage. So when we ask Mark and Joyce, and we ask every single one of our families who are like, you know what, I think debt-free life is for me, possibly. We look at your debt. We say, how much are you in debt? So Mark and Joyce said, we're in debt $180,198. Currently, their payments towards all of those debts every month is equivalent to $2,177 a month. That is how much of their $7,000 a month of income goes straight to lenders before it actually goes into your lifestyle. Mm-hmm. And then also their average interest rate on that $180,000 is right at around 10%. So it's very important for us to actually look at their real debt, right? And I know that sounds weird. You're like, we just looked at their debt. But in all reality, they actually have a little bit more debt than they thought that they had. So when we broke down on that $180,000, applied that interest rate, because they are making minimum payments to get towards there. On their current path, they were going to be in debt for 30 years, but they were going to pay an additional $199,959 on top of that $180,000. So their real debt is $380,157. That's going to be a lot of money that's not going into their retirement. So it's very important that we take a look at something like this in order to make a more educated path towards being debt free. We have to look at the whole thing for what it really is. So let's go to the next one here. Let me make sure I've got everything right. Oh yeah, so then they also have their current retirement plan. I think it's very important that we break this down too, because you can see this is what they're doing to prepare for their future. With their $36,500 currently in their retirement savings, with their $300 a month contributions, right now it's in an IRA. And if any of us know anything about 401ks, IRAs, we do know they fluctuate in the stock market, which is okay because that gives you the potential for very large gains whenever we're in a time like this. But at the same time, this is your future we're talking about. We have set this up to where when doing the math of seeing like in 30 years, where would they be? We just set it at a standard 5% annual interest rate and putting them at the same tax bracket that they are right now. That's saying taxes will not increase in the future, which we all know with the amount of debt that we have, we are the government's bank. So if they're going to go try to pay off this debt,
they're going to get a little higher probably.
Yeah, the tax rate's going to go up. I mean, we would be foolish to say it wouldn't go up in the next 30 years. But let's just say, for math's sake, that the 25% income tax bracket is exactly what they're going to be at when they get to retirement. They've earned 5% annually on their $300 a month contribution towards their retirement. At the end of 30 years, they should have $408,000 in their retirement before taxes, but then you take that 25% out on the back end, they're retiring on $306,000. So let's see. Betsy?
Yeah, you want me to take it? So
Okay.
with with Mark and Joyce, as we do with all of the families that we talk to, they're doing something already for their retirement. All right. And they've got a plan to pay off debt, maybe 30 years. Some people it might be 40 or 50, depending on the type of debt that you have. And so all we do is we just say, hey, here's what it could look like if you choose debt-free life. All right. It's no cost, no commitment, just for us to kind of run those numbers. And so with Mark and Joyce, what we said was, hey, if you choose to use debt-free life, what you would do is instead of getting out of debt in 30 years, you'll be out of debt in 7.8 years. They were like, well, that's pretty cool. And then instead of paying, then they're also going to save $122,000 in interest. All right. So instead of paying $200,000, they'll pay like $80,000 in interest. So that's just $122,000 that stays in their family's bank account.
So I'm getting
They were like, yes, we would like that to stay in our family's bank account. And so now what happens is, since that $2,100 was going towards their towards all of their debt, now they've got that freed up and they can put that towards their retirement. All right. And so when you think about, okay, they were going to be paying this amount towards their debt for 30 years. Now they've got an additional 22 years where they're putting $2,100 towards their retirement. So what does that look like? That means that when they retire, they're going to have over $1 million in additional retirement. And so we were like, hey, this is just what debt-free life could do for you. It's your choice. Would you've got to choose the best thing for your family. We looked at the opportunity cost, like if you don't do debt-free life, how much are you missing out on? This is actually going to increase their cash flow by $820,000. Because we wanted to account for like, oh, hey, they would have still already had like $300,000. But what we're helping them just by using the debt-free life plan, we're helping them gain an additional $820,000. And so Mark and Joyce were like, I think we're going to choose that for our family.
Yeah.
And so, the families that we work with, again, we always show it's their choice. And a lot of times, or really most of the time, they're saying, hey, this is something that we would like to do for our family. And so, some of the benefits of the debt-free life program, of course, other than just paying off your debt really fast and having a massive cash inflow, massive cash increase, you've also got this peace of mind. We help you kind of look at your budget and see, hey, is there any money that we're not using super efficiently? Maximize that cash flow. That word dramatically, that's a pretty dramatic word, but we feel like it's really appropriate here. You're going to dramatically increase your savings.
Yep.
Get out of debt in less than 9 years. You can prioritize your accounts, and then, of course, retire with tax-favored income. you don't have to pay taxes on it. I mean, that's because you would pay taxes kind of at the beginning. So it's, it's very much works in your favor. So what we do here is we just kind of try and say, hey, how can we help you plan for your retirement? Make sure that, if you this is where you want your retirement to be, kind of what does that retirement look like? What's your dream retirement? Hey, let's make an action plan and let's get there. I'm a planner, and I know that if we've got a plan, then we can do anything. Mm-hmm. And so here's kind of the process of what we actually do with Debt Free Life, because you might be like, how does this actually work? Are you guys like, is this legit?
We're genius.
Legit. I use Debt Free Life for my family, and it's been a huge game changer for us. So what we first do is we kind of go through a budget and see, hey, is there any money that's not being used in the most efficient way? And that's different for every family. With Mark and Joyce, we just kind of went through and looked, hey, are you overpaying on any of the payments? Are your savings accounts, are you getting the kind of rates that you want? Is there any other money that's just kind of sitting there and not being used very well? So we just kind of go through and look at each family. And everybody's different. Everybody comes up with a different number. We just work with whatever your particular number is. All right. And so then here's the whole idea of how Debt Free Life works. All right. This is so cool. So let's say, so this is just going to be a little example here. All right. So let's say you want to buy a car. All right. You got $20,000 in cash. I mean, that's pretty sweet. You got $20,000 in cash, and you're going to buy this car. So here's two options. Okay. The first option, you take your cash and you buy your car and you drive away in your car. And that's pretty sweet. Now at the end of that transaction, you have zero cash, but you have a car. All right. So very straightforward. You have a car.
Right.
All right. Now what Debt Free Life, the idea behind Debt Free Life is not quite as straightforward, but you'll see why in the end, it's more beneficial to you. So let's say instead of taking that $20,000 and just paying cash for the car, you say, all right, I'm actually going to take this $20,000 and I'm going to put it into a CD at a bank for 4% interest. So I'm going to earn 4% interest on that CD. But I still need a car. So I'm also then going to take out a loan for $20,000 at 5%. So you might be like, Betsy, 5% is bigger than 4%. All right. So you are correct. That is
good.
Let's look at how those actually interact when we're talking about compound interest. Okay, so that's why we talked about compound interest earlier. So in that CD that you've got, you're earning that compound interest. So the first year you just earned 4% on $20,000, which is almost $800. Then the second year, you don't just earn 4% interest on $20,000. Now you're earning it on $20,800. And so that amount of interest each year keeps increasing. So first it's $799.99. It's $831.32.01, and so on and so forth. So at the end of a 5-year period, you can see how you've now earned $4,300 just in interest. Okay. So let's see what's happening with your loan that you took out for $20,000. Now you're paying down this loan. Okay. So paying down the loan. So at first you've got interest of $848, but now each year it starts decreasing. Over here on the 4%, it was increasing, but with the 5%, it's decreasing. And so if you look at these and we compare them, for the 5% loan, you ended up paying interest of $2,600. You earned $4,300. And so now that's a difference for you of $1,600.87, $87.54. So why is this a good option? Okay, so option A, you pay cash for the car, you drive away in the car, you have zero cash, and you have a car. Okay, option B, we kind of get a little creative with it. Okay, we put the money in a CD, and we pull the money out for the loan. But at the end of the day, you have the car, you have an extra $1,600 and you still have $20,000
Boom.
you still have that in cash. So a little bit more complicated, yes, but at the end of the day, you end up with not just a car, but you end up with $21,600. All right. So that is the essence of your family bank. What we have of Debt-Free Life, what we do is we make it into a bank for your family. Right. So like, for instance, if you wanted to pay off debt, let's say you had $5,000 in debt, you could just pay off that debt in cash, and then you're back up to zero. So you're not at negative, you're at zero. What we do with Debt-Free Life is that you put that money into your Debt-Free Life bank. And so what that actually is we use a whole life, high cash value policy, and that becomes your Debt-Free Life bank. And so however much money you put into it, it's different for every family. We're just using $5,000 as an example. So you put that in, and you're earning interest. It's guaranteed interest. It's guaranteed to be growing. And then when it's time for you to pay off loans, you pull it out from that bank, all right? And then why do we do that? Then if you pay yourself back, just like you did with that loan from the bank, you got to pay the bank back. So you're going to pay yourself back. And then you end up earning additional money from there. So now we got you back at zero. You still have $5,000 and you have an additional amount. All right, so that's how we use the power of compound interest
Boom.
to help you get out of debt. All right, so what is this kind of doing here? We're redirecting your inefficiently used dollars into this Debt-Free Life bank. We're allowing your money to grow with guarantee, so you don't have to worry about stock market crashing or kind of fluctuating, that sort of thing. Now, you can borrow from this bank at any time because it's yours. It's your Debt-Free Life bank. There's no penalties, no taxes ever. It's yours. You control it. We help you just kind of get it set up. We're there if you need help, but you're the one that's in charge. You get to pay off all your debts. Then now you got that freed up cash flow, you pay the loans back. Why do we pay ourselves back? Because that just increases that power of compound interest inside your Debt-Free Life bank. You can finance future purchases like, kids' braces, kids' education, weddings, another car, a special anniversary vacation, whatever you want to do. You can do it with your Debt-Free Life. And then since it is a whole life policy, when you pass away, this is something that you get to leave to your family as a legacy. It's completely tax-free. And so in fact, one of the wealthy families in America, the Rockefellers, they've used this idea of like a Debt-Free Life bank. And that's been able to continue their family's legacy of wealth as compared with the Vanderbilts, also historically a wealthy family in America, but that's kind of dwindled throughout the generations. And so this is something that's not only, hey, for me right now, me and my kids, but this is something that can provide generational freedom financially for your family. All right, Jordan, I've talked a lot. Why don't you take over?
You're good. No. So it all comes down to your decision about achieving your financial goals with Debt-Free Life. I think that this is so important because one of the things that Debt-Free Life can literally do for a family, and it does it for every family that is a part of it, is you will get the month and year of which you will be paying off your debt. What if you knew that? What if you knew the exact month, the first of that month, whatever day your payment's set up for, that day of that month of that year, you'll be completely debt-free.
Awesome.
Wouldn't you be looking forward to the future?
Yeah.
Just a little bit more. So let's talk about your decision. With Debt-Free Life, you got to ask yourself, do you want to be like Mark and Joyce? Do you want to have, $1 million saved for your retirement for when you get there? Do you want to be able to save $2,100 a month for 22.2 years and put that in your savings account? We're not even talking about, guys, I want to make sure this is also abundantly clear. That money isn't being invested. We're not investing the money. It's like a savings account that just so happens to grow at like 4% guaranteed. That's incredible. So this is a guaranteed path That's why we can say with no shadow of a doubt, we can say this is the exact month and the exact year you'll be out of debt. And then all of that extra money just goes straight into your retirement. Do you want to be like that?
Yeah.
So there's a couple of success stories you'll see here. If you actually go to the SFG Life website, if you go to sfglife.com/debt-free, you'll be able to see countless testimonials from real life people sharing about what this has done for them. I just watched 4 of them before we hopped on here because I was like getting myself pumped up. You know, some people listen to music. I listen to debt-free life testimonials. And I was like, next week, we're going to have some of those just revolving on here. I think y'all should hear it from the words from the mouths of the yeah.
There we go.
Yeah, I had an analogy planned, but it didn't land, so that's fine. But here's some success stories. As you can see here, we've got some small business owners. We've got a young couple paying off student loan debts. Just countless success stories. Go to the SFG Life website /debt-free and just check it out yourself if you don't believe us. But countless people saving hundreds of thousands of dollars in interest payments and more than that, millions going towards their retirement. Also, this isn't, I know it says sales history on here, and Betsy and I have made this also, we've talked about this, is the fact that what this represents is how many people are being impacted. So let's take a look at what just over the past 3 years, $171 million in interest saved for clients. And also, check this out, 1.4 billion with a B, with a plus sign afterwards, projected in retirement increase. Did you know that most people, the statistic is 63% of people by the age of 65 are relying on friends, family, charity, and Social Security for their retirement? And it's because of debt, guys. It's because of interest loans. You know, that's why they've got cash loans. I spoke to a guy the other day who was taking a cash loan to pay off another cash loan that he had taken out a year ago. And that's interest on top of interest, guys. People are refinancing homes and starting over the treacherousness of compound interest that we're paying on home loans just to get a lower payment and live a little bit more comfortable. What if you could just be out of debt and have that money going towards your retirement? So basically, I believe we've got this thing wrapped up here.
Yeah, so that's pretty much what we have for you. And, you know, we just get so excited, like Jordan said, because these numbers, they're mind-boggling numbers. But, man, they represent people just like you, just like me. They represent families whose lives have been changed. They have financial freedom. They can, you know, it's not really about the money. Yeah, sure, it's great to have that extra in your bank account. But it just means, wow, what does that mean for our family? What does that mean that our family gets to do, and the choices that we can make, that we're free to make because we're not worrying about this debt. We're not worrying about where the money in our retirement is going to come from. And so, you know, that's what we love to see. We love to make that difference for families. And so if this is something that you're interested in, we'd love for you to just sign up and we can talk with you and see, hey, what would this look like for you? And so you can go to our calendar, calendly.com/debt-free-knox, and we've got a couple of different options there for you to choose from, whether you're kind of ready, like, hey, I want to get started right now, let's go. We can do that. If you're like, hey, can you help me? Can you explain it a little bit more? We can do that. And if you got just some feedback for us, we'd love to hear that too. But, you know, we do this every Thursday at 6 p.m. And if you know anyone that is in debt and that would like to get out of debt and would like to be ready for their retirement, just have them join us. Let's, you know, we'd love to just kind of chat, share this with as many people as possible because of how we know it just really makes such a positive impact. You can sign up at our website, debt-free-knox.com, and we just look forward to seeing you again next week.
Yes, and we also want to make it abundantly clear that I know everything says Knox. It's just where we're based out of. This is for anyone, anywhere. As long as you're in the United States, we can take care of you. So if you know of anybody, just send them our way, send them to that website, get registered, and we'll see you next week, Thursday at 6.
That's right. Have a great one. Thank you, guys.
Bye, everyone.
Thank you. Bye.